Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thanks. Great to be here.
All right, so we're talking food. These restaurant stocks have done pretty well. Inflationary pressures got pushed aside, but, Darden's not doing that great recently, down about 6% so far this year. Do you guys have data that's reflective of the weakness in this sector?
Yeah, I mean, so you look at Darden, it's a big mix of a lot of different brands, right? They've got a good spread going on, and the last quarter they reported same-store sales down about 1%, including the flagship Olive Garden down 1.8%. I think Longhorn was the only one that was up, and actually that kind of fits with the day that we've got. We've got Longhorn doing really well, highest happiness of all of their companies, of all of their brands. And, obviously on top of the list when it comes to web visits. So that's, people checking out the menu, ordering online, things like that. So, you can see here that that's the one that I think is pulling them along. Olive Garden's one that everyone's going to look at, though, because that's the bulk of their business. So very important that Olive Garden continues to do well. But right now, it's kind of interesting. They're getting hurt by and benefiting from this sort of trade down that's happening with the consumer, where some of the lower, middle or lower income people that used to go to Olive Garden are now trading down to fast casual or fast food, and some people with middle or higher income, or they used to go to really nice restaurants. Maybe that's hitting the wall a little tough, so they're going to Darden restaurants now. So it's interesting to see this shift as people deal with inflation. And some of them are saying, you know what, we're going to cook at home, because when you look at, how inflation's treated all of the different areas, groceries are up 1%, fast food, fast casual is up 4.5%. And sit-down restaurants, which is where Darden fits in, is up 3.5%. So actually, groceries is the way to go right now if you're trying to save money, is to cook at home. So pretty interesting to see how all that's working. And of course, last quarter we talked about Olive Garden was the one that disappointed. But we do show actual slight improvement in Olive Garden on a year-over-year basis. And we see very good strength out of Longhorn Steakhouse. So those are the two I think that we're going to be watching. Some of the other, you can see some weakness on there. One, Cheddar's is the weakest when it comes to happiness. Really, really bad score there, 56%. But the rest of them are doing fairly well, with Longhorn leading the pack at 85. So it's just a matter of, which restaurants I think investors are going to focus in on. It's got to be Olive Garden. And then, are they going to let the success of Longhorn kind of, fade away the fears of Olive Garden doing so-so? So I think that's going to be the story of this earnings report coming up.
Landon, you're right. When you look at the numbers, Olive Garden is like the iPhone to Apple, to Darden restaurants. It's 50% of their revenue comes just from Olive Garden. But it's interesting. You mentioned Longhorn Steakhouse. They also got Capital Grille, and now they just acquired Ruth's Chris. So they have a big footprint in meat. But was Ruth's Chris a good buy here? Because it looks like it's barely adding on. Clearly the Olive Garden is their biggest footprint, but then it's Longhorn Steakhouse is number 2. Ruth's Chris doesn't seem like it's in the mix just yet, even though they have the scale, they have the foot traffic, they have everything they need. And I'm frankly shocked. If you look at my suburban Chicago town, it could be called Darden, Illinois, because there's every one of these restaurants is within 3 miles of my house.
That's awesome. Yeah. I mean, you see them everywhere. And once you understand all the companies or all the brands that they own, then you're like, wait, Darden. It's amazing, because a lot of the times I think people just used to think Olive Garden and Red Lobster, no more on Red Lobster, but it's far beyond that. But yeah, I think the Ruth Chris acquisition is going to be interesting, because we're talking about this trade down. They're at the higher end of that. They're kind of in the Capital Grille area, or maybe Eddie V's. So it's tough. I mean, there is a little bit of a segment in, segmentation going on, where if you're doing okay, you're still doing okay. But if inflation is hurting you, it's really hurting you. And those are the people that are trading down. So It's possible that those higher ends like Ruth Chris are going to be a little bit more immune, but man, so, I've gone out to eat and some of the prices for a steak are insane. Just not just Ruth Chris, but everywhere. And then you wonder why they're so high. You go to the grocery store and the steaks are really expensive there too. I mean, it's just inflation. It's unbelievable. But when you look at what the stock's done, it was it was 133 I think back in October, got up to 176 in March, and now we're back kind of in the middle, 153 or so. But if you zoom in, we're kind of at the top of a range that's gone from maybe 145 to 155 for the last about 2 months or so. So heading into earnings, I think that's important to see. Long term, we're in the 1 year chart, we're kind of in the middle of the expectations. But on the very short term chart, we've got a little bit of a run up going here. So I think that's going to just raise the bar slightly for earnings. And the data that we're showing is, it's a solid company long term, but we don't have anything that's just screaming that they're going to do really, really well. Again, we've got some data saying that Olive Garden is slightly up on a year-over-year basis with consumers, and that was the big reason that they disappointed so poorly on the last earnings report. So maybe that'll hold this price here. But my guess is that we might have a small sell-off, $5, maybe $10, and then if you like this company long term, I think picking up shares in the 145 to 148 range is really strong after this report.
Yeah, they've had a base over the last month and a half of about 145 on the downside. But, is it concerning to you guys when you look at data when the higher margin parts of their business, the Capital Grille, the Eddie V's, the other one that they have that's a higher end fine dining segment? I mean, they had sales decrease of 1% last quarter, Landon. And the higher margins are the ones taking it on the chin. And now you have all these promotions out of Olive Garden, their big breadwinner. Is that a concern when you guys start looking at this data that, hey, that's going to continue to trickle down?
Yeah, it is. It's tough. I mean, all these restaurants, not just Darden, but all their competition, they're trying to figure out how to navigate this inflation situation, because some of them are basically running promotions and discounts trying to keep the customers coming, and others are raising the prices a little bit because they have to. Darden is along that lines of raising the prices, but they're trying to do it as little as possible. So they did raise prices slightly, but they kept it below the rate of inflation, so their margins are contracting while still their prices are going up. It's a tough spot to be in because everyone complains when you go out to eat how expensive everything is. All restaurants are experiencing this, and it's just a matter of how you deal with it. And like you said, the high margin ones are the ones that are struggling a little bit. The only thing that we see, again, that the diamond in the rough is Longhorn Steakhouse. Everything that we've got on them is really positive. 85% happiness, which crushes Texas Roadhouse, for example, a big competitor of theirs. But really, really strong numbers out of them, and strong numbers on a year-over-year basis for consumer demand and just general interest. So that I think could be the saving grace maybe down the road. It needs to grow a little bit more to compete with Olive Garden to be the one that that's the iPhone, as you said, of Darden. So we're just gonna have to wait and see on this one. But we don't have any data that says they're gonna come out and blow it out and have an amazing quarter. So most likely, based on the range that we've seen, I'd bet on a very small decrease, and then you can pick up some shares.
Yeah, they lowered sales growth expectation. Real quick, Landon, you got an earnings score on this one?
Yeah, not crazy. We're at -7, so just slightly on the bearish side. And some of that, like I said, has to do with the recent pop up in shares. I think expectations are a little high, and I just don't see them hitting them.
All right, great stuff and great data as always, Landon. Appreciate it.
Thanks, guys.
All right, Landon Swan, co-founder at Lightfolio, breaking down the data for us. Yeah, Kev.